let's have a look at the TTF front month first. I'll just go to the daily chart directly, and I want to talk a little bit how we knew that the market is going to push higher or not, how high can it go, what's going on. So I want to share with you the new Clever Markets playbook on technical analysis. And on page 72, we see that we have the section on, it's like step 3 out of many, where we are building the methodology for spec traders. You remember, like, step 3 is pinpointing the start of a price reversal. So it all starts with a bearish reversal candle or a bullish reversal candle, but you kind of want to see some sort of reversal candle happening. So on the TTF front month, that's exactly what happened, right? On the 25th, we saw that, so the bears are not in control anymore, and after a couple of red days we got this doji, and it's even like a harami cross, which simply means big red candle followed by a harami, followed by a doji candle that is within the body of the first candle, at least the bodies, right? Then here we could call this a hammer, and you remember, like, a hammer has like a small body, maybe a tiny upper wick. This could be defined as being too much of an upper wick, but hey, the sentiment behind the candle remains the same. We have a long lower wick that is showing that the market tried to push lower but failed to. So at this point in time, if you remember a couple of days ago, I think we are marking out the height of this bullish candle and the low, and we kind of knew, okay, so if we get a daily close above this, then we are really dealing with a corrective move, and that kind of happened, right? So we did get our bullish candle here. So first step completed. Then we started to look at volume. So here, directly on the daily chart, volume isn't really telling us all that much. I mean, people are still on holiday. Volume isn't all that crazy, but it's solid. I mean, look at that, right? But overall, there's nothing spectacular towards the upside or the downside, right? Now, in terms of volume, let's be a little bit more cautious overall, prescribing too much value to volume spikes or declines. I mean, it is the end of the month. We are rolling. So if we get high volume, then there's simply a lot of traders who are just scrambling to close their last positions. If we see very low volume, then we could always argue, yeah, of course, the market already closed out with everything rolling over. So towards the end of the month or the contract period, volume in itself is carrying less value overall. Now, the next thing is, like, are we seeing any key level breaks? So you can see this could be like a fib retracement or like a channel break or anything like that. And yeah, you can see here, I just put this one back on, what we previously broke. So we were working, or we still are working, with Fibonacci retracement levels, right? We put the 100 up here and the 0 down there, because we want to measure this down leg, how high can the corrective move go, right? A correction towards this of this down leg. And we kind of knew that, okay, so if we break above the 23.6% fib retracement at 32.95, then we know we have a corrective move higher going on. And that's exactly what's happening, right? And then we move towards the 38.2, and we are now exactly topping out near the 61.8. Or so it seems. Of course, we're not analyzing the candle that is still in the process of forming. So what's the next step? We are now starting to look at oscillators. So usually what we want to see is like a bullish oscillator signal in combination with the bullish candle pattern. So what's the oscillator doing? So of course, you know me, my oscillator of choice is a stochastic. We did get a bullish signal. So we crossed from oversold territory into neutral territory, which is showing us that we are no longer making lower lows. So we pushed higher. And that was accompanied by a bullish signal here. By the way, on Thursday, I have a webinar on the London Stock Exchange all about oscillators. So we do a little bit of a deep dive there. Join me. I put it on my LinkedIn. There's a joining link. I'll probably republish it today. Have a look there. Okay, so it's all like looking good for like a correction to even start. Now we try to estimate, okay, how far can it go? We already talked about that. Probably towards the 61.8% fib retracement. And now this is super important. When do we know that this is really just a correction or the start of a full-on uptrend, right? So here's two things, and you can see it's multi-time frame analysis, which is simply advising us to move into the lower level chart. And we do exactly that now. So first things first, on the daily chart, if we get a daily close above 34.6 3 euros per megawatt hour, which is the 61.8% Fib retracement, then hey, probably more than just a correction.